Good morning, everyone. Dan coming to you from tradingology.com's trading room, and we'll get the doors opened up here. December 8th, one day after Memorial Remembrance Day for Pearl Harbor. So good to see you guys. It's been a long time. We're taking some time off in December here, we know, right around the time. So figure we still have a check-in though. So we'll get the doors open up here. Good morning, Dave.
Good morning, Dan. Good morning, everybody.
Long time no talk.
Yeah, I know. This is nice. I'm glad we had a chance to do a trading room today and get to see everybody.
Yeah. Good morning, BD. Good to see you.
Morning, BD.
I got a new setup, so now I'm standing. I'm not in my chair anymore.
Oh yeah, you got the little nice background there. It looks like where is that from?
We had the marathon with Star Wars on over the weekend, so I was inspired by that. So it's the rise of the resistance, I'm going to call it.
Gotcha. Nice. Very nice.
I think I got everybody in so far. Yep, we're good to go. I think Tom's going to make an appointment or an appearance. He might be iPhone. We'll see. He's got the day off today.
Yeah, is that you, Tom? Are you iPhone?
Yeah, BD caught the marathon too. It was awesome. All right, what we got going on here? Little turnaround in the internals just to start the day off, just to briefly cover it, even though we'll talk just about anything. Whatever you guys want to talk about, let us know if you got any specific questions. Major divergence from the volume to the issues for sure, though, because we see the big move up in the issues here. Volume's just slightly ticking, just barely above zero right now, but as we see, big disparity there. So
yeah, that's huge.
We are at all-time highs. Obviously, you guys have seen the news. And I did some consolidation on my charts recently, so you see how you guys like this. It might be an eye chart for you. It works better on the bigger screens, but I've put all the indicators in one nice spot here on the three major indexes for the Dow, the NDX, and the SPX. And we see some rumblings of the BOP curve turning to red here. It was nice, strong green up for a while. Then yesterday we're seeing chinks in the armor and no real strong down movements, but it's just a nice way, as we say, to keep that barometer. So keep an eye out. Be very careful. I'm actually going to start taking some time off from trading just because of this time of year. And yeah, we had the election. I think Monday, if I remember right, Dave, correct me if I'm wrong, I think is when the actual Electoral College casts its votes. So that's going to be a big deal next week.
Yeah, I don't know the exact day, but I know it's coming up pretty soon.
Yeah, I want to say it's Monday, but I could be wrong, but somewhere around there. So that's a big one too. So just any of the potential volatility, we could have a sell-off at any time at these all-time highs. We see all three bubbles here.
Yeah, BD says the 14th.
14th, there you go. I got a couple guys at the door.
Yeah, so a couple interesting things about the stock market. Number one is on, I believe it was Monday. Yes, yesterday. The put-call ratio hit the lowest level at 0.394 in 21 years. Which means that there's about 6 times more buying of calls than there are puts. So nobody's buying puts, nobody's protecting, nobody thinks that the market's going to decline. And that is the last time it was this low was in March, I believe, of 2000. March and April 2000, yeah. So, what happened in 2000? Yeah, the dot-com crash. I mean, everything.
Yeah,
everything fell apart. And so now we're at the same level that we were 21 years ago. So I don't know if that's going to lead to anything, but it's an interesting factoid, huh?
So let's see what's going on in the live futures markets. This part I'll still never understand. We're still week by week unemployment and RTY is taking off in the morning.
Yeah, and we had just before the market opened, we had a revision of the third quarter U.S. productivity revised lower. I don't know if you have the, that one page you bring up with all of the economic announcements. Well, I'm not sure what the number was, but it was revised lower.
This must be on the lower filter. So let me pull in the lowers because it's showing pretty not active this week. Let's apply here's your
revised. Revised non-farm productivity. Down 6, revised unit labor costs and productivity. Actual forecast previous. Yeah, previously it was 4.9%. It was revised to actual 4.6%, which is a drop of 0.3%. And then the labor costs were minus 8.9. Now it's not minus 6.6. So that's actually a slight improvement in labor costs. But yeah, but the productivity was revised downward a little bit. And then we went down. The futures were down. The YM futures are down almost 200 points. And now we've kind of come back up a little bit. And now we're starting to just kind of move sideways here. Nothing real exciting going on in the markets. I think the 14th, it could possibly be, an event of some sort. We'll see what happens. I don't think anyone is expecting any surprises when the Electoral College cast their votes.
Exactly. That's what it comes down to, right? If something happens that we don't expect, who knows, right?
Yeah. Then you never know. I feel like the market's on a precipice. It's just like right on the edge there. It's like, it's hanging on, by a little rock or a piece of grass.
Just waiting for that next toothpick, right?
So we'll see what happens, guys. But I think we've got some interesting couple of months coming up here. And, we'll see. I also saw the Association of American Investors, which is the, I can't remember the name of it, but it's the independent American investors. It's not the hedge fund managers or the institutional investors. Right now, they're at their bullish level since 2007. And they are 77% bullish, and 77 and more than 99% of those who are bullish think that we're going up 10% in the next year.
Wow.
Yeah. So they're incredibly bullish. They're like all in.
Yeah, there's some, I'll have to pull this up on maybe later when I don't have it at my handy, but yeah, there's using fibs and whatnot. There's like, what is it? 16,000 on the NASDAQ, I want to say, for some high-end targets for if we get another big rally. It's pretty amazing.
Wow.
I'll pull up the fibs next time we do some stuff. I was doing some research on that too. I've been doing a bunch of research lately where we might go. I like your theory before though. What you had like 3407. We're not far away from that. Then we could go down to 10. Who knows? And then it'll maybe back up to 40.
I was looking at actually 30,490, not 34,000. 33.
Oh,
30,
right.
490. So I don't think here's kind of the big thesis that I'm working on. Right now, the only news announcement we heard about any kind of stimulus at all had to do with student loans. They're deferring them again out until February. So everybody who thought they were going to have to start paying student loans again in January are now deferred out to February. So they got a couple more months. Then we have no stimulus. So in a lot, I think millions and millions of people of unemployment benefits are coming to an end at the end of December. So again, we have this issue of the US dollar potentially railing off a major low. And I don't know if you have a chart there on TradingView of the DXY, but it has gotten murdered. But at the same time, over the last couple of weeks, we've seen cryptocurrencies just kind of move sideways. And so really, when we're talking about investing in cryptocurrencies or we're talking about investing in the stock market, we're really competing against the US dollar. And we have seen cryptocurrencies move sideways to down. We've seen stocks trade sideways to down. They haven't really made a lot of progress in either way, as the DXY has kind of, gotten to the point there where it doesn't necessarily look like a bottom. We might come down into those lows at 2018 around 89 or so, but it just looks like a big sideways pattern. So if you zoom out a little bit and draw a line across the 102 level and then that 89 level, and basically what it is just a flag. You can grab it by the those little dots there. Now go straight across. You don't have to do any angles there, because what we want to do is we want to look at the trading range that it's been in. The one way over to the left, you can drag it out of the way.
I was going to say move. There we go. There we go.
You have to select the line tool again over on the left side.
Keeps playing games with me.
No, way over to the left.
There we go.
And so we had a major move up into this trading range, right? From 2000, looks like July 2015 or 2014.
Yeah, 17 there, 15 was back here, March of 15.
And then if you go all the way down to the bottom of your left-hand chart on the left side of the chart, that's 14 right there, April of 14.
Yep.
So we had a major move higher, and really we have just been in a trading range between 102 and 89 since then. That's all we've been. I mean, it's not a bear market in the DXY at all. It's just a pause here. As you can see that we had a major move up in 2014 and then just sideways. So if you look at it, it's really a trading range. And typically what happens, we're down at the bottom of that trading range right now. And this is an indication. It's not a pennant because it doesn't have that feature. I can't remember. It's just basically a trading range. And typically what it'll do is, because the previous move was higher from that June of 2014 up to the 100 level, now we're in the trading range. It should break out through the upside. So we're at the lower end of that trading range right now. And I anticipate over the next few months, we're probably going to go back up to the upper end of that trading range. And if it has enough momentum at that part, at that time, we're going to break through that 102 level. That's kind of the analysis that I'm looking at. And you can also take a look at this in terms of Fibonacci, or not Fibonacci, but Elliott wave. From the June high, it was March high, because you're on a monthly chart. From the March high down to where we are right now is a 3-wave. So we had a move down to, right about there. Then we had a little bump up in, what was that, November, and now we've got another 3rd wave down. We're probably going to go back down just below 90. That'll kind of, like, all of the bullish dollar people are going to be wiped out at that point on a short-term basis, and we're going to see then a move higher from there. So it's a 3-wave down. 3-wave down is typically a bearish pattern in the Elliott. It's not typically. It is a bearish pattern in Elliott wave. And so as long as that 89 level holds, I think we're going bullish.
And that's through, if you're looking at monthlies like this, March, April, May, June, it could be anywhere in there, and how long it takes to get there and then potentially come back. Interesting how a lot of things are lining up for end of January, February timeframe.
Yeah. Yep, that's true. And, everybody is so bearish on the dollar that that's kind of the time that you really want to be long.
Yeah, you always want to have the opposite sentimentality, right? When there's blood in the streets, people are buying.
Everybody hates cash, but I'll tell you, at some point, the U.S. dollars is the Treasury Department is not going to let the dollar go into a free fall. They know it's in a trading range, it's taking their time, but they're not going to let it fall apart because the ramifications of having the U.S. dollar fall apart would be major high interest rates, and they do not want that at all. They want lower rates, and they've said it. So if you're betting that the dollar is going to go lower, you're betting against the Fed. Nobody wants to bet against the Fed.
Usually that doesn't win.
Yes, that's true.
The other part that we always keep an eye on too is, I'll maximize this guy. Right around 17 on the VXX now.
Yeah, and we know what the formula is for the VIX, and it's actually the buying of and the bid and the premiums on both calls and puts. It's just not on puts. A lot of people think when premiums on puts rise, then the VIX goes up. But no, it's the premium on both calls and puts. And as we just mentioned, the put call ratio is at the lowest level ever, which means that, the last 21 years. And that means that people are buying calls like crazy because they think the market's going up, and that is affecting the premium on the call options. And so that will keep the VIX a little bit higher. So that's why it isn't into the teens. Well, it is kind of into the teens now, but it should have been in the teens 3 months ago, and it wasn't. So, but that is a good area of support right there. That is a
tiny little area. Yeah, tiny little gap from back in February that it's been holding. If it breaks through that, it could go back down to its 13 area.
Yeah,
that's one thing to keep an eye on too. As we also like to watch the SPY VIX. Look how high this is. So we're getting up near there. So as I look at both at the same time, VXX is coming up, approaching that 25 level. SPY VIX as well. We'll maximize that one here.
Yeah, and look at the average true range there, right back down to some pretty low levels that we haven't seen in a long time.
Yeah. Get rid of some of these bars here. Go to a weekly. Way extended over previous 18, 19, March, 350s.
Now, is that the moving average you have on there? What is that? Is that the 200?
That's the McGinley.
Oh, the McGinley, yeah. Look how far away it is from the McGinley average. I mean, typically when it goes that far away, it's typically not good for the market. It's too overextended. So
switches to first one was SPY minus VXX. Now here's SPY minus VIX, just for comparison.
Right. Yeah, we're not back up at that 2025 level yet on the VX, on the SPY minus VIX, but it really, I mean, it should have been, right? It should be because of all the momentum we've seen to the upside.
Right.
It looks like it's rolling over. BD says Biden actually doesn't have a pet to the White House. House and Senate will contest electoral votes, and House will vote on the president. That's what he said. Oh, path. Okay. Yeah. Boy, that would be interesting, wouldn't it? I mean, geez, if it goes to the House. Wow. So, I mean, this election thing may not be over. This whole narrative may.
Yeah, nothing's over in this year, man. That's why I'm telling you. I know I talked to some of the members about a new strategy I'm going to be rolling out for you guys in 21. It's been working great. Even I'm going to pause on that because I don't trust these markets whatsoever right now. It's Looney Tunes time. This is what you asked me.
Yeah, I mean, just a couple of days ago, what was it? We saw like a really sharp drop in the YM futures. I mean, they just tanked. When was that? Last Friday? Do you remember that?
Oh yeah, there was a. I can probably pull it up here.
Yeah, it was crazy. It just dropped like a rock out of nowhere. I don't know if it was Friday or when that was.
Right here.
Yeah. Well, it's kind of like those shock waves. So if you guys have not seen, or you need a repeat of volatility, the volatility video that I did in the membership site, go back and watch that, because what it does is it looks like it's the same thing as a seismograph. So if it starts to measure those little movements in the in volatility, and when you get a little bit of a shock, that's just the beginning. And so, like, I don't know if you're not in an earthquake area.
Nope.
I'm not. But if you're in California, you know that when you feel a little shock, a bigger one is coming. A bigger one is following that. And that's kind of what it reminded me of, because it absolutely just fell apart out of nowhere for, I don't think there was a reason.
No, so yeah, we were looking, we're like, where's the news to justify this? Not that we try and follow the news, but there usually is something that they'll put up. And there was nothing. It was like maybe after the close, they're like, oh, a test isn't working or it's taking longer or something. It's like, well, that's not a valid point for that. But yeah, we dropped from over 30,000 down to 29,850.
Yeah. So yeah, that's a good 300 point drop right there, and you got or 200 point drop out of nowhere, just for no reason. So those are the kind of things that I'm kind of paying attention to now. And it's one of the reasons why I am also taking a break from trading. I've traded a couple of cryptocurrencies, but other than that, I'm not really doing anything trading wise.
This time of year, the second half of December, once we start getting to it, a lot of people are taking off, so there's lower volume in general. So that just makes it even easier for an erratic, not normal move to happen.
Right.
Whether that's driven by retail traders or not, but yeah, there's less institutions in there. A lot of people are taking breaks. There's an interesting thought too with tax code unknown and what's going to happen is that there might be people taking money out just to pay less taxes this year instead of next year. Because as we know, there's a lot of money in the markets and where they're moving it to. And if they're worried about paying higher taxes because they're talking about a major shift, right, with the presidential change. And we already know he said there's going to be more. Yeah, they promise it's only on the elite, but we know how far promises go.
Right.
With the government. So yeah, that's one thing I had heard recently. It's like, that's an interesting point. There might be a lot of exit money just because of that. They'll pay less now instead of more later.
Well, I mean, he's thinking about making it retroactive to this year if he does repeal any of the tax reforms.
Don't let him hear that.
Yeah, so yeah, I know, but that's what he's talking about now, is retroactive to this year. And if that's the case, then yeah, it's not good news. I just there's changes coming. The biggest thing for me, like I mentioned, the macro vision, the kind of macro stuff that I'm looking at is basically surrounding the U.S. dollar. I just don't. I honestly believe that it will drive both stocks and cryptocurrencies lower. And I don't think. I mean, I am bullish on cryptocurrencies in the long term, but just reviewing kind of the pullback that we had since we hit the highs in XRP and Bitcoin and stuff like that up around 20,000, it was immediately rejected. And look at that big wick on XRP. I'm very bullish on XRP. I'm hoping for a retest of that 330 level on XRP, but it looks like we're in a kind of a wedge trading pattern right now.
Mm-hmm.
Like that. And so there's a potential for it to break out and go back up higher, but it means that the dollar has to go down. And if we do get that bump back down to 89 on the US dollar on the DXY, then we'll probably see, XRP shoot up. And if we do get a little bit of FOMO, we could hit, a couple bucks. Most altcoins, though, have not gone back to the 2017 highs. Only Bitcoin has. I don't think there's any that I know of.
I don't think I saw any either. I think you're right.
I mean, I checked almost all of the major ones, and I don't think I saw anything that was back up to those highs. And only Vet made a new all-time high this year. I don't think it was higher than that before.
No, it was definitely.
Yeah, I think that's the all-time high right there. So it was made this year. Those are the ones I kind of tend to think that, if we do have another bull market, could do pretty well. Maybe, there's this little, I'll share with you something that's just in the back of my mind that I can't shake it off, is that the rally that we've had in crypto in August, September, October, that's it. That's the rally. And there is no more. I can't shake that feeling that was the rally that everybody's anticipating. It did not go as high as everybody thought it would go, but that was it.
I was sitting on my couch. I think we talked the day after this, and I watched this hit. And I was like, 90 cents? Are you kidding me? I mean, I literally saw this happen on my phone. I don't know if how long it actually lasted. I probably can't get back there, but.
Yeah, I don't think it lasted very long. It was just like a few seconds. I think everybody had some sell orders up in that area, and it just right back down again. If you go, you can, I guess you can see it. It's on a 5-minute chart. So it lasted about.
It was literally like less than a minute. I was like, as fast as I can move from my phone to my computer, it was already gone. I'm like, wow.
Yeah, it didn't last long. Now, if you go on a weekly chart, that's pretty crazy. I mean, that bar lasted 5 minutes. Not even that, because it went all the way back down to 69 there. Wow, geez, 70.
70 for a low, 92 for a high, 0.921.
Now that's volatility. See, when volatility comes in, that means prices are going lower. What happened right afterwards? You see those big wide-ranging bars like that, and that's why the course I did on what was the name of it now? I can't even think of the name of it.
Oh, I know it's. You're testing my memory too, but yeah.
Yeah, I know. So the course I did on just looking at price action for volatility, it's in the members area.
I'll get it in a second here.
Yeah, go take a look at it. Anyway, that's what it tells you, that you get a big wide ranging bar like that, especially, I mean, if you think about it, from 90 something cents down to back down to 70 something, that's a 20 cent move on a price of an asset that's 90 cents. That's over 20%. That's like 22, 23% move in a 5-minute time frame. That's massive. That's volatility right there.
Winning trade system.
Yes, the winning trade system. I talk a lot about, even if you know nothing about the VIX or volatility or anything else, all you have to do is look at the percentage changes, and especially here, look at this 5-minute bar moved 22%. That's volatility. That means that we're going lower. And so if you follow that, you go back down, it dipped all the way down to like 56 cents, within not even 24 hours.
Oh, right. 4.5 hours.
Yeah, 4.5 hours. So, I mean, and now if you go out to a weekly chart, that high right there, and what's that move?
Or if you look at it this way, it lost 38% in 4.5
Yeah.
hours.
Yeah, wow. I mean, that's huge. That's talking about volatility. Now, if you go out to a weekly chart, that high there, it goes all the way back to September of 2018. Are you going to have to go on to?
Oh, it's the wrong one. Yep. I got to switch over to this guy.
Yeah, you have to go all the way over to Bitstamp. They have the longest history. Yeah, so if you now, are you all the way over there? I don't think so. You got to zoom out a little bit.
This goes back to this is on Binance.
Oh no, you need Bitstamp. Right at the top.
Where are they at? Top one. There we go.
Okay, now you can see September of 2018 compared to where we are right now. Yeah, and then move it over to all the way. Keep going. and scrunch it up a little bit. There you go, right there. So that September of 2018 looks almost identical to what we've done here. No, 2018.
Oh,
September.
this one. Yep.
Yep, right there. That is almost an identical high. Perfect little high right there.
Yep.
The only difference is that we've got a lot of volume from March through, looks like June of this year. A lot of volume here. It looks like accumulation. And of course, we have a lot more volume as we went up to that high. So I'm bullish, but cautious here. Because if we replay what happened in September of 2018, it means we're probably going back down to some new lows again.
Yeah, we can see down a quarter again, 20 cents, 15.
Yeah. Yeah. So just a heads up. I'm bullish, but I'm cautious. It looks like a repeat of September 2018. And if you look at that really big rise in the dollar was in that 2014 period. What did cryptocurrency do? Well, geez, I don't even think you can go back that far in 2014. No, you can't. Yeah, that's
maybe on Bitcoin.
Maybe Bitcoin. But we haven't seen a big rise in. I don't think you're going to be able to. I don't know. Maybe you're going to have to really scrunch up there in 2014.
Mm-hmm.
Yeah, so 2014, it looks like the beginning of 2014 and the end of 2013, we hit a high and then we just kind of fell apart. What's the percentage change there from the top in there? Yeah, from there to the
68?
bottom. 60, 70% almost.
Yep, 80% if you go all the way out here.
Yeah, 80%. That's when the dollar shot up when we looked at the DXY chart. So if we're down, let's say we go down 70% on Bitcoin, what would that bring us to? So, yeah, you're gonna have to stretch out that chart. Yeah, 70% decline would bring us back down to 14,000. What is it?
5,800.
5,900. Yeah. Holy cow. Yeah, that's right. Minus 13,800. Yeah. So, if we get another sharp rally in the dollar, we could see a $6,000 Bitcoin. Hate to give you this bad news. So, Andre says, would you hold then or sell at this level? I'll tell you what, I would take money off the table. I would keep some just in case we do go higher, because there is a little bit of room for the dollar to move lower. But after that, when the dollar hits 88, 89, I wouldn't keep money in Bitcoin. Just me personally, not investment advice at all. Everybody, the problem too also is like just everybody's bullish on the stock market. Everybody's bullish on Bitcoin. I haven't heard anybody say a word about any kind of bearishness on Bitcoin at all. And they all point to the fact that there's only 21 million of them. Well, who cares if nobody wants it? Right?
Yeah, it just comes down to who wants what at the time, no matter what type of currency you're talking about, crypto or fiat or precious metals. If nobody wants it, nobody's going to give you anything for it.
That's right. Hey, I've only got I've only got one of these pens, but I guarantee you nobody is going to pay me $20,000 for it.
Right.
It's rare, but if nobody wants it, I mean, Andre says, I'm asking about holding XRP. Same thing. At the same time, I think we could see a little bit of a push up in XRP, maybe back up to the 65 level or 70-cent level. And then, coinciding with that drop in the US dollar. And then we could see a dramatic decline.
Yeah, just zoomed in, compare this candle you were just saying with these. Right after this, we got a little, not exactly a doji, but you could almost call it that with a tiny body.
Almost the same. Yeah, that's right. Almost the same. You're right.
Tiny little body. This could easily be this week could turn into this.
Yeah. Yeah. What's the decline there from that top? No, you'd have
all
to
the way
that bar, yeah. To like the lowest low there just before, right there.
64%.
64%.
So if we drop this,
yeah. Bring us back into the 20-cent level.
Yep, about 28.
Yeah. Just saying, that's the thing that's been kind of floating around in the back of my mind, that there is a risk of danger here that, we could see cryptocurrencies drop down fairly significantly. And you're right, I didn't notice that little doji there after that big long that tail. And you're right, it's very, very similar, eerily similar.
Mm-hmm.
Yeah.
Or it could be, who knows? Maybe it says no more doji and it does one of these. We don't know. Nobody knows.
Yeah, but it would have done it. See, it would have done it the next week.
Right, exactly.
We did. We got the doji instead, and now we got a red candle.
Yeah, it's looking like this setup instead of this setup.
Yeah.
So if you have profits from accumulating, like you say, not advice, do whatever you need to do, manage your own risk, but it might not be a bad idea. If you bought in here, it might not go to here. Take some and let the rest ride. Do whatever you need to do, but at least you're informed.
Yeah, absolutely. Personally, I sold some at 70. I'm going to sell some. I think again, if it does go up to like 65, that 65 level, I don't know if it's going to hit 70, but 65. And then I'm going to just wait. I'm selling the majority of my holdings. I sold some at 70, but I'm holding most of it yet, maybe at 65. My break even was 33, so I'm still, in profit, but I've been holding this for a very long time.
Right.
And I really need to take some profits here.
Which we did expect. It wasn't something that wasn't like a regular trading. We weren't expecting to swing trade in a week or two. So this is absolutely an opportunity after you've been holding for a year plus 2 years. Hey, it reaps some of the benefits of what you've been working on for 2 years.
Yeah, exactly. Yeah, that's exactly right.
You don't have to sell it all because if it does keep going up above $1, you still get that too. But at least this way you get the best of both worlds and you protect yourself.
Yeah. So I'm taking all my investment back and just kind of seeing how this plays out. Tom B is in the house.
Not Investology. I have to go look up a domain name now, Tom. You have an option on Bitcoin hitting 1 million within 10 years of having. In other words, buy and hold for Bitcoin. I don't know, David's going to go to 1 million.
Did I share my research with you on the tulip bulb mania? I did. I shared a video.
You mentioned it. Yep.
Yeah, just reminds me of the tulip bulb mania.
Tom knows it. You got it.
Look, we have to look at Bitcoin for what it is. It's a computer code. Okay, it's a computer code, guys. That's it. It's rare, yeah, because there's only 21 million of them and everybody's been buying them up and maybe nobody has any, there's not very much floating around. But just like the tulip bulbs, when I watched that video, there was an auction. There's an auction in Amsterdam that takes place. I don't know how many times they did it a year, but everybody showed up for the auction and the price of a tulip bulb had gone to the point where the same prices as a mansion in Amsterdam. You could buy a mansion for Amsterdam or a tulip bulb. And so they started out the auction at like $1,500, which I guess was like the price of a mansion back then. You're talking about the 1400s or 1500s. Nobody bid. So the auctioneer dropped it down to like $1,490. Nobody bid. He dropped it down to $1,475. Nobody bid. He dropped it down to $1,300. Nobody bid. He dropped it all the way down to like $500 and nobody bid. The buying had completely just evaporated. Nobody was willing to pay that price anymore. And so the market completely collapsed. Within, I guess it was like 6 months or a year after that, it was back down to like a penny a bulb. I'm not saying that Bitcoin is going to do the same thing, but I do feel like there is an over amount of bullish sentiment in Bitcoin only because it's in short supply. But that's not the reason things are valuable. It's not the reason.
Yeah, there's a lot of things that don't make sense, and especially with all the meetings going on, who knows what's going to go on with whatever we know. Everyone's talking about the Great Reset. What's it going to do? Anything long term is off the table for sure. So that's why, yeah, maybe it does go to 1 million. Who knows? I think that's the luck of the draw, my personal opinion on that. But I'd say we're starting to roll over. There's a chance of it going to a not happy place.
And at some point in the future, it could, only because the US dollar is completely collapsed and then we're in chaos. I mean, anarchy. The one thing I would not bet on is the US against the US. The one thing, let me repeat that. The one thing I would not bet against is the US dollar. I would not bet against it. And if you're betting against the US dollar, then yeah, your vision of Bitcoin is going to go higher. But I would not bet against it. This country is a long ways away from anarchy. I don't think I'll see it in my lifetime, but maybe. But I don't think so. I think we're going to go through a very deep recession over the next few years. And then after that, after this deflationary period is over, then we're going to get rapid inflation. Maybe when they start to unleash all of the Federal Reserve bank accounts and they start to actually turn that into cash, and then we're going to get flooded with cash. And then I think we're going to see $1 million Bitcoin. We could, because cash will be basically Venezuela cash.
Yeah. Then you won't need to buy toilet paper anymore. You use your currency.
I bought a warehouse, 20,000 square feet, and I'm filling it up with toilet paper. I'm just kidding. Just kidding. That's going to be the currency of the future. Yep. Instead of Bitcoin, toilet paper is going to be the scarce product.
Rolls, you got it.
BD says, you follow Martin Armstrong. I have listened to some of his videos, but I haven't listened to any of them in like a year or two. What's he saying, BD?
I don't know him, so that's news to me.
He did the Armstrong indicator. He created his own indicator back in the 80s, I think. Yeah, Armstrong Economics. What's he saying, BD? What's the latest skinny? We'll give BD a chance to type that in.
He's typing fast. Slow down through 2022.
Yeah. Okay.
Yeah, stuff can't go on forever, right? No matter what it is, whether it's up or down. We've been on a super up move in a long time.
I feel a little bit about the same way about the stock market. I saw something interesting. The guy who bought all the Bitcoin, Sayers, I forgot the name of the company that he runs. His last name is Sayers.
Don't know him.
What is the name of it? Anybody know the name of the company? He bought like $400 million worth of Bitcoin. Deliberate corporate strategy. Michael Saylor, Sayllor,
Gotcha.
MicroStrategy Inc. And I heard this morning, and it was in an article. Get this. Now think about this for a second, because this will freak you out. What has 90% of the stock market gains since 2008, 2009 have been stock buybacks. Companies have borrowed money in order to buy back their own stock because they don't see enough future growth in their own product lines and their own development and capital improvements. This guy, he bought $400 million worth of Bitcoin. He is now floating a bond, a corporate bond of another $300-400 million, which means he's taking on debt and he's putting 95% of it into Bitcoin. So now he's borrowing money to buy Bitcoin.
Oh, great.
That to me spells and smells like a mania.
Yeah, there's one you're talking about.
Yes, 250 million Bitcoin. He bought that. He bought another 150 million after that. I think he's up to 400 million. But now there's a new article saying that they're going to float a corporate bond for more hundreds of millions of dollars that they're going to use. Now the corporation is on the hook for the money to pay back investors, bondholders, and they're going to use that cash. He said part of it's going to go towards operations. Part in 90% or more is going to go towards buying more Bitcoin.
So the second mortgage application, Tom says. Well, yeah, there's only one way this can go, right, Dave? If we look at history, all you do is you borrow more to get out of it. That's all we've ever done.
Yeah.
Historically, world wars, you get in trouble. How do you get out of trouble? You borrow more.
Yeah.
That's all they're going to do, right? What else do they know? It's either that or anarchy, like you say. They're not ready for chaos and anarchy yet.
Exactly. And the reason why the United States is so strong is because we do print our own currency. We're not dependent upon our bonds issuance on a foreign currency like Argentina was. Yeah, Argentina, their currency was worthless. I forgot when this was. I think it was back in the 90s or 80s, maybe late 80s or early 90s. They could not get anyone to buy their bonds denominated in the Argentinian currency. So what they did was they made the smart guys in Wall Street came up with this idea of floating an Argentinian bond backed by US dollars. And when interest rates blew up, the bonds dropped like crazy in Argentina. Everybody tried to get out, and it just collapsed them. And that's why, they just went through a terrible economic decline. But with the United States, we're denominating our bonds in USD, which is our currency, which we can print as much as we want. So I think that's why, one of the reasons why I think we're a long ways away from a anarchy type of situation or a devaluation like Venezuela. Whether it takes 10 years, 20 years, 50 years, 100 years, I don't know, but it'll come, but I think it's a ways away.
Andre's
That's why we're not betting against the US dollar.
Exactly. Yeah.
Yeah.
Andre's asking if we're back at trading the VXX option strategy if we're waiting I'm personally, you guys do what you need to do. The strategies are there to learn. And if you see an opportunity, that's your call to take it or not. I'm personally not trading anything with real dollars the rest of this year, whether it's options or futures.
Yeah, me too.
I might break my rule and do a 5-minute one, but I highly doubt it. I'm staying out of the markets right now.
Yeah, me too.
Good time to learn stuff. Learn it, paper trade it, and see how things move. But don't put any, I'm not putting any real dollars after stuff right now.
Yeah.
I'm preparing for 21.
Yeah. Tim says Euro dollar system plays a big role here. It's why we're different than most others. Yeah, interestingly enough, I think it was just 2 weeks ago, there was more worldwide trading in the Euro dollar than there was in US dollars for like one day. More volume in Euro dollars than US. Interesting. First time I think that's happened. Or first time I think since, I don't know if it's the first time ever or just like in a long time.
Yeah, as long as you're in control, Tim, your 50-minute trades, that's cool. Just understand your own risk, and I know you do. You got your good systems down there. Andre, I'm not trading because there is too much built up potential for a major correction, which is coming sooner or later. And it's easier to trade on the upside and buy things than it is to try and catch that falling knife. So I'm not going to try and buy it as a correction starts. My personal opinion, that's just what I'm doing.
Yeah, I actually agree with that. I'm not really doing anything at all. I traded XLM last week, just a short-term trade. It dipped down to like 57 or 15.7 cents, and it traded up to like 67 or something like that, and I got out. But I'm not trading futures. I'm not trading stocks anymore. I got out of almost all the stocks that I'm in. Cryptocurrencies, I sold some. I'm going to sell some more, especially XRP when it gets up to 65. I'm going to be, I'm not trading.
Yeah, and just to cover quick to those, Riot and Mara were two that I took profits on personally in some accounts. That's up at 11. Yeah, I left some money on the table, but I'm still happy with
definitely
the returns that those delivered.
Yep, absolutely. I got out of Mara a little bit early too, but I'm pretty happy with that $6 sell in that range. Very happy.
The only thing I will caveat the last statement with, the only thing I'm looking at accumulating right now is some micro gold futures.
What are they?
Micro gold futures, MGC. Maybe I'll do a separate little deal on that, or we can talk about that next year. There's not next year, next week, maybe if we do one. Maybe it'll be next year, who knows? But I think this is a good time to accumulate some of that. We'll do a follow-up on that.
Okay. Tim says, according to Jeff Snyder, that's only what they can see and quantitatively measure. He says that it's much bigger than anyone actually knows the euro dollar. Yeah. I tend to agree with that. Absolutely. I think so too.
MGC is the micro gold futures contract, Andre, and thank you, Tim. It's my my Rise of the Resistance background for December in our Star Wars marathon. A trade update. There was a few, I think we put out a notice. What was it, the TLT side, where we bought back some at a penny just to lock up those profits, and then just letting the rest of them run. And let me look at what it's doing right now.
Yeah, in my, I'm thinking of adding to the UUP trade at this point.
And that's the one that goes till January of 21.
2021, yeah.
So that's
22. 22.
Oh yes, sorry. Yeah, it's 410 days away. I was looking at January 21st is what it actually says, but yeah, 2022.
Yeah, I might add to that because I think if we are close to a bottom in dollar, then it's all upside from here.
So that one is there, yeah.
Yeah, BD. I looked at the short options on the SPY that we've got. I've got some in February and most in March. I don't think they've gotten down to that penny 2 cent level yet. I might wait a little bit. There's a potential for the for stocks to go up maybe another 300-400 points. I'm looking at 30,450 on the Dow as a potential top. If it hits that area, then I'll probably take those off. Maybe just, it depends on what the price are. I mean, if I can buy them back for a penny, 2 cents, I'll probably do that because there's nothing left in the trade after that. If it goes below 5 cents, yeah.
Yeah, mine are about 15 cents right now for March.
Yeah, it's still a little bit, there's premium left in there, so I'd keep them on just as protection on the long side.
All right, well, that'll probably just about wrap her up here. I appreciate your time, Dave. We've missed you, so thanks for jumping on.
Yeah, I missed you. I missed all the guys here. So thanks everybody for joining us today. And Sheldon, is that new? Are you new, Sheldon? I see a comment here on, he said MicroStrategy, which is the name of the company I was thinking of.
Yeah, this one went out to more of an open one. So members and people that wanted to see what we're all about. So hopefully you guys got a good feel for what's cooking. And Sam, you just sent me a DM, shoot me an email at support@tradingology.com and I'll hook you up with what I can do for you for the VXX. So let me know, just to remind me.
Yeah, Tom, good to see you. And it's a pleasure for sure. You take care as well. And can you just touch on the high probability trades, Andre says? High probability trades. So
I'm trying to think of what he would be by that too.
That was my handoff to you. I don't know what he's talking about.
That's the trades that we're going to cover in 2021 because,
yeah,
or maybe that's our GC trade because it's got a high probability of going up. So that's all I got for you right now, Andre. Thank you, Tim. We appreciate it. Maybe we'll get one in before Christmas. We'll see.
Yeah.
We could probably do something.
I'm up for that. Absolutely. Greg, absolutely. You guys have a great day. BD, Tim, Andre, Tom. Used a different word.
You're probably thinking asymmetric trades, Andre. That's the ones that we were just covering with UUP and that. So that might be what you're thinking for a high probability. I don't know if I'd call them high probability. But
no, they're low probability, but
low probability, but high leverage and massive upside if they hit.
That's right. Yeah.
So of the 4 or 5, if one of those hits, it covers everything.
That's right. Yeah.
So they're almost like little mini lottery tickets.
Yes, they are. They're low probability, but they have high, very, very large potential. And the reason why they're called asymmetric trades is because there's really very little downside to them, but massive upside. And so like the one we put on UUP for the US dollar index cost us 6 cents. We've got 500 contracts. So, I mean, well, I've got, I don't know, I don't think I have that many. I have maybe 300 contracts. So it ended up costing me like $1,800. But the upside is we've got over a year before they expire. And if they do, hit the mark that we're looking at, it's a $300,000 payoff just on a $1,500 investment. That's why we call them asymmetric, because there's little downside and lots of upside.
So go look at
the probability of them hitting are small.
And if there is one specifically on that, Andrea, it's called follow UUP or something. And if you don't see it, shoot me an email and I'll send you a link to it. But there is one specifically on that. And that one's one you could still get in because there's over a year left.
Yeah. And then we've got a bunch of SPY puts, spreads. I've got some DIA puts. I didn't do spreads on those. I just bought the puts outright.
Correct. Because they were priced wrong at that time.
Yeah, they were priced wrong at that time. And then they ended up going down further. So we could have gotten them even cheaper, but that's all right.
They're coming back more today. It's already on the way back.
All right. Good. All right, guys. Have a great weekend. And hopefully we guys see you before the major holiday coming up, which is known as Christmas and or Kwanzaa or what holidays? I'm not sure. There's a Jewish holiday at that time too, I think.
And Hanukkah, Merry Christmas.
Hanukkah,
Kwanzaa.
yeah. That's right.
We put them all together.
Put them all together. All right, guys, take care. Thanks, Dan.
See you guys. Good to see you.
Yep, you too. Bye.